Hi there, this is Sandra at the Mortgage Center. A special message for those of you who are on who've received this newsletter. As you know, the election is coming up next week, and I just wanted to share with you some of the insights that we're getting from the different political parties and sort of what we might be able to expect moving forward depending on who's going to win the election. And one of the things that I think I'm going to just focus on the positive ones, not the silly ones. And when I was just doing some research on this, one of the things that I noted is that some of the positive silly things were you could tell that people actually didn't work in the housing industry and they were kind of had some silly platform ideas. I'm using the word silly, but there's another word that starts with S that I just don't like using. So anyway, one of the things that's super encouraging for me is that all of the parties are focusing on housing and affordability. And I mean, it sounds a bit cliche. However, the whole idea of housing affordability needs to focus on possibly increasing supply because the what we're seeing right now in the housing market, and especially like in my territory that I primarily service, which is Guelph and the surrounding area, is that we're really seeing some supply issues, and those issues obviously can't be solved in the next year or two. There just needs to be a rethink on that. So again, all of the political platforms are really focused on housing and affordability and helping people get into the housing market. So let's just chat with some of what I think some of the good ideas are. One of the things you may not know is that in Canada, when you buy a house and you have less than 20% down, you have to pay default insurance. Okay, that was sort of something that happened back in the 1970s. No one could buy a house with less than 25% down and actually get a mortgage through a bank because the banks thought it was too high of a credit risk to give somebody a mortgage if they had less than 25% down. So in the 70s, the Bank Act was redrafted to allow people to put less money down, but the mortgage had to be insured against default. And now it's typically 20%. But in one of the regulatory requirements is if you buy a house for over $1 million, and I know what you're thinking is that I can't imagine buying a house for over $1 million. They're becoming more common in this market. You need to have a minimum of 20% as a down payment. You cannot get an insured mortgage. So I think that's kind of fair for the Guelph and surrounding area because most of the people who are buying those over $1 million properties in this my market usually are moving up from buying their first house to now their second house. But in the markets like the the Greater Toronto area, you're buying your first house for over $1 million. So coming up with 200,000 at least for a down payment is challenging, especially if you've been paying $3,000 a month in rent. So there, many of the political platforms are really encouraging increasing that minimum or the maximum amount to purchase a house from 1 million to 1.25 million. And I think that will encourage and open up more opportunities for first-time home buyers, especially in markets where $1 million house is like a starter home. Okay. For me, I think one of the things that I'm really encouraged by and sort of promoting is that making it easier all around for people who are putting less than 20% down to actually qualify for a mortgage. So I know you may know this, but in Canada, when you have less than 20% down, you got to pay the default insurance, right? But the maximum amortization right now is 25 years. So if the government extends that amortization to 30 years, it's just going to make homeownership more affordable, but it's going to allow people to qualify for more of a mortgage and then get into the housing market instead of paying rent. The other thing that's not mortgage related, but it kind of is because it's driving sort of overvaluations on properties, and something that I'm really supporting is a home buyer's bill of rights and more transparency around the home buying and selling process, such as transparent comparable home data, possibly mandatory home inspections, and an open bidding process that would probably slow over valuations on properties. One of the things that we do if you're working with us is when you're ready to put an offer on a house, we actually ask you to send the MLS so that we can run a purview report. And it's a tool that we use. Unfortunately, it's not available to the public. We pay an annual subscription on the product. But what it does is it shares some interesting background history and ownership history of the property, and it also runs a valuation on what the property could possibly be worth. So it's really insightful so that when you're actually putting an offer on a home, you have some of that background history if your real estate agent hasn't shared that with you. So promoting a home buyer's bill of rights where there's more transparency in the home buying and selling process is, I think, important. And the last thing I wanted to mention to you is, I mean, this may not directly impact you, but putting a taxing foreign-owned vacant land against land banking. So essentially, what's happening is a lot of foreign companies and possibly foreign wealthy people are buying large swaths of land that they're just capturing and then hoping to resell it for a significant profit down the road. And so they would be selling it to developers, and then that extra value or cost that they had to purchase the property, the developer had to purchase the property, would then be transferred to the home builder and then also transferred to the homeowner. So that's going to affect you and I when we purchase a property because it's going to increase prices. So taxing foreign-owned vacant land against land banking, I think is a good idea. So those are just some of the things that are coming up, and we're looking forward to as possible changes in the mortgage and housing market. So wanted to remind you that we love helping people. You can always connect with me, send me an email, chat with me on any of our regular social media sites. You can check us out at skipthebank.ca is our website, and you can actually book an appointment through there. So thanks so much for supporting our business and being a client. And if you're currently not a client, we'd love to help you. Okay, have a great day. Thanks again for listening.